Here's the gold price trend from January to mid-July 2025. Gold price trend. January-July 2025. In January 2025, gold started at a low of USD 2,623.90 and reached a high of USD 2,798.46, averaging around USD 2,707.61. February saw a rise, with prices fluctuating between US 2,834 and US 2,951, averaging near USD 2,896.43. In March, the trend accelerated, with gold ranging from 2,885.9 to USD 3,124.71 and averaging approximately USD 2,987.2. By April, gold surged to its peak so far, touching a high of US 3,432.77, with the monthly average around USD 3,225.89. May maintained strong momentum, with gold trading between USD 3,186 and USD 3,398.12. averaging 3,289.49. In June, the high watermark continued as prices ranged from USD 374.18 to USD 333.48, with an average of USD 1,353.98. As of mid-July, July 14, gold has ranged between USD 3,301.75 and USD 3,364.06, with an average of around USD 3,335.79. Trend summary. Gold has shown a significant upward trend, rising from about USD 2,624 in January to over USD 3,400 in June, a gain of roughly 31%. The record high of the period was in April 2025, peaking at US 3,432.77, largely due to heightened global risk factors and central bank accumulation. A slight correction or cooling began in July, with prices softening but remaining above USD 3,300, indicating continued investor confidence. Overall, gold experienced a 27 to 35% increase year-to-date, marking one of the strongest rallies in recent memory. Key drivers behind the surge. Safe haven demand surged due to global economic instability, war risks, and fears of inflation. Massive central bank purchases exceeded 1,000 tons annually, doubling the decade average rate, which bolstered global demand. Weaker confidence in fiat currencies, especially the US dollar, encouraged institutional and sovereign diversification into gold reserves. Interest rate expectations. The US Federal Reserve signaled delayed rate cuts, maintaining real yields at levels supportive of non-yielding assets like gold. Technical indicators suggested strong momentum through April-June, but hinted at consolidation or a potential pullback beginning in July. Outlook for late 2025. Analyst consensus leans toward a short-term correction. HSBC expects an average of USD 3,215 by year-end. Citi analysts have warned of a possible 20% correction if macroeconomic conditions stabilize and bond yields rise. Technical patterns suggest price compression. Bollinger Bands are narrowing, while MACD remains positive but weakening, pointing to a possible breakout or breakdown. Geopolitical flashpoints, ongoing trade wars, and continued interest from global central banks will be key factors determining the trend into Q3 and Q4. What to watch? U.S. Federal Reserve's interest rate decisions and inflation outlook. China-U.S. trade and military tensions as potential gold catalysts. Currency market volatility, especially in emerging markets. Central bank buying patterns, especially from BRICS Plus countries. Let's break it down with clarity and precision. Whether now is a good time to invest in gold depends on your investment goals, risk tolerance, and current macro financial conditions. Here's a detailed view as of mid-July 2025. Current market context, July 2025. 1. Gold price trends. Gold is currently hovering around USD $2,390 to $2,450 per ounce, near historic highs, having steadily climbed due to global economic uncertainty, geopolitical tensions, especially in the Middle East, Taiwan Strait, and Ukraine, currency devaluations and weakening USD, central banks continuing to accumulate gold at record levels. Number 2, inflation and interest rates. While inflation has somewhat stabilized in many economies, interest rates are being cut, including in Malaysia and the US. Lower interest rates reduce opportunity cost of holding gold, increasing its appeal. Hammer 3. Central bank buying. According to the World Gold Council, central banks, especially China, India, and Turkey, are still aggressively adding to their gold reserves, adding upward pressure on demand and price support. Hammer 4. Investor sentiment. Many institutional investors have returned to gold as a hedge against a potential equity downturn and de-dollarization. The emergence of tokenized gold assets and ETFs on blockchain is expanding retail investor access. Reasons to consider buying gold now. Inflation hedge. Gold remains a historically strong hedge against monetary debasement and long-term inflation. Geopolitical safe haven tensions in Gaza, Ukraine, South China Sea, and cyber warfare risks make gold a crisis asset, a safe place to preserve capital. Weakening USD and rate cuts. As major central banks, including the Fed, start to cut interest rates, the USD is weakening, making gold more attractive to global investors. Portfolio diversification. Gold historically has a low correlation with equities and bonds, helping balance volatility in a mixed portfolio. And risks to consider. Overbought risk. Gold is near all-time highs. Buying now carries the risk of short-term correction, especially if geopolitical tensions ease or if there's a surprise rate hike. No-yield gold generates no income, unlike dividends or bond interest. It relies solely on capital appreciation. Policy shocks. If inflation drops faster than expected, or if economic growth surprises to the upside, investor interest in gold could decline. Verdict. Should you buy gold now? If you're a long-term investor, 3-10 years, looking to hedge against inflation, protect capital from geopolitical shocks, diversify away from equities or real estate, then yes, it is still a good time to invest in gold, but consider phasing in your investment rather than going all in at once. If you're a short-term trader, exercise caution. Gold may be due for a minor pullback. Watch for support around $2,350 and resistance near $2,500. Physical gold. Ideal for security-focused investors, but storage and insurance cost apply. ETFs or tokenized gold. More liquid and easier to trade, e.g. SPDR gold shares, Perth Mint gold token. Gold miners. Indirect exposure through gold-producing companies, which may offer dividends. A heartfelt light. To every soul whose hand did give, you've helped me dream, helped me live. In darkest hours your light came through, with heart so kind, so pure, so true. Your gifts, like stars in deepest night, have steered me gently toward the light. Each coin, each word, each silent prayer, a thread of hope so rich, so rare. My eyes once dimmed now seek the skies, and slowly clearer visions rise. Because of you, I dare to see the world again. Its grace, its plea. Your compassion's flame will not just stay with me alone. It lights the way for others wandering through despair to feel the warmth of selfless care. You've shown what love in action means, in quiet ways through giving scenes. You've built a bridge from soul to soul and made the broken feel more whole. So let this thanks rise like a song, a melody both soft and strong. May your example gently call more hearts to rise to give. To fall into the joy of lifting pain, of planting hope where none remains. Your kindness walks beside me still, a light, a love, a living will.
that subscribe button to show your support.